Personal finance practice problem using Excel. Budget versus actual analysis. Prepare to get financially fit by practicing personal finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're down here in the practice tab as opposed to the example tab. The example tab, in essence, being an answer key. Information on the left-hand side, we're going to populate that into the blue area on the right-hand side, comparing the budget numbers to the actual numbers, this being a standard process within our budgeting process, meaning we take, in essence, the income statement, the performance statement. We use that as a baseline to project out into the future what we think will happen, and then we use that as a map to help us guide our performance, possibly helping us to change our behavior in certain areas. Then we compare what actually happened to what we budgeted to happen, look at the differences, use that to start the process over again, thinking about what we're going to do next year. So note that this kind of budgeting process is using the income statement. And remember, I'm always going to kind of jump back to the accounting process on how you're going to logistically do this. And remember, from an accounting standpoint, your options are really, do you want to do a full service accounting kind of method where you enter the transactions in from, say, your banking transactions as they happen, which you might use like a QuickBooks for or a OneNote for or something like that? Or are you trying to put together periodically, possibly a more simplified kind of method, and just looking at your data periodically and trying to compile your data together, which you might use other types of software for that can pull your data from the bank, showing you the ending balances, which is quite good to kind of see where you stand from time to time. So that but they're not as good. That kind of system is not as good for creating the income statement. So then you're going to have to go and kind of piece together the income statement. So if you use something like a QuickBooks or something like that, then your actual income statement will be a lot kind of easier, more easily generated by the data input process. And you can actually then enter a budget into something, a normal kind of accounting software like that as well. And then you can run reports that will actually do this in essence for you, comparing what actually happened to what you planned to happen. If you're using a different method where you're basically just kind of checking your ending balances from your financial institutions periodically, then that gives you a great balance sheet, but it's going to be a little bit more work for you to kind of plan out the budgeting or the performance statements as you kind of have to piece those together. Whatever method you use, the common comparison that you would want to have would be the comparison. We're just going to be looking at the expenses. You can line them up in an Excel worksheet if you're compiling the data that would look something like this. We'd have the expenses with the budgeted expenses, and we just compare them to what actually happened. So this, of course, happened. The budgeted numbers we're imagining happened before the month was run or the year was run or whatever. We're going to say month here. And then the actual expenses, that's after the month has happened. Then we can subtract out the budget versus actual and look at our differences. So I'm going to do this by saying this is going to be equal. We're just going to build our table here. This is a standard table. It's really good practice to build your tables. I'm going to say this equals the food. I'm going to grab the autofill. I'm just going to drag that on down to this cell here, and that's going to pull in all of our categories. Then I'm going to go in and put a total down below. Now also just realize when you have your categories, we've chosen food, auto, rent, clothing, and the personal. Now, there's some pros and cons to categorizations. We talked a little bit about categorizations. That's one of the most difficult parts on the personal side of things because there isn't any real standardization. There's more standardization on the business side, given we have the same kind of business objective. On the personal side, you might think, well, there's a trade-off between more and less categories is what I'm trying to get at generally. If you have more categories, you're able to zero in on more specific types of things, which is great. You get more detail, you get more nuanced. But that takes more work, too, to do things like budgets versus actual. The less categories you have, the less nuanced data you have. So if, for example, I always go back to the restaurant data and the food data. If you're breaking out and trying to figure out what kind of food you're eating, are you going out to eat versus fast food restaurants versus groceries? That added detail is great, but it also means that you then have to do your budget versus actual and make your allocations when you look at your expenses in a more detailed fashion as well. And you can imagine some people get way overboard where you can clearly see that the amount of detail is probably not worth the time for them. So, for example, if you're trying to list out, each individual type of food, I'm eating so much red lettuce compared to, carrots or something like that, then, at some point you're probably doing more detail than you need, and other people err on the other side, right? If you only have, like 3 accounts and, you got personal is kind of a miscellaneous category. And so you got personal, miscellaneous, and the rent, and those are your only 2 categories, then that seems like you're not, you probably want to at least be breaking out like the phone bill and the electric bill and whatnot, and possibly some kind of your personal spending. So notice you can err on both sides. So picking those accounts are going to be some of the things you want to keep in mind. Also note that, as we looked at in a prior presentation, you also kind of want to keep in mind the behavior of the accounts, so you can see what your goals are in the future. So you might actually rework your cash flow statement in, as we saw, kind of a flexible format to emphasize that, or just realize when you look at your accounts, things like the rent, for example, is what we called a fixed cost before. That's generally something that's not going to change from month to month. So when you look at your budgeting, it should be kind of easier to budget. And when you look at your behavior, comparing what I did compared to last year, it shouldn't be something that you're concerned with as much, because that's not what you can change until you sign the next lease. Okay, so let's pull in the information. We're just going to say this equals the 510. I'm simply going to copy that down using the good old autofill feature, putting my cursor on the autofill handle, left-clicking and dragging on down. So that's going to be our budgeted information. We got the same data down here for the actual data. Obviously, the actual data you'd have to find somehow. You have to compile somehow, which if you might use accounting software like a QuickBooks to do, or you basically might add up your core kind of expenses that you're using, bills and whatnot, or whatever other method. Look at your checking account, take the data. You can compile the data using other software and whatnot. But we'd have to compile the data, and then we're going to say this is going to be equal to the actual numbers, and copy that down, copy that on down using the good old autofill, and that just copies the whole thing down. And then we can subtract the 2 out, doing the difference. I'm going to take the budget minus the actual. That means if the budget is higher than the actual, if we're talking about expenses or cash outflows, that's good, right? We have a surplus. We did a good job. We spent less money than we should have. If it's higher, then we spent more money. So we're going to say this equals the 510 minus the 430. And then I'm just going to copy that down. It'll take the same difference, putting my cursor on the autofill handle, dragging on down. So there we have it. This one's subtracting out. This one's subtracting out. This one's subtracting out. Now remember, when I say it's good, like normally if you're doing a budget for your own personal purposes, then your goal typically is usually to decrease, your actual spending as compared to the budget, and try to think about where are the places where you could trim the budget without it costing you or hurting your lifestyle. Or, you might have other places where you're saying, hey, I'm going to spend more money here because that's what I want to do. But usually we're trying to lower the budget. And notice, if you compare this to like other uses of the budget, if you were, it's a classic example is it in managerial accounting, or if you're in a not-for-profit organizations, then they're often trying to find a way to actually spend the exact amount of the budget or even more than the budget, so they can argue for more money, right? And just realize that if you've worked with budgets, from a business standpoint or from like a nonprofit standpoint, you have this push and pull of, I don't want to be too under budget, even though I could, because then they might cut my funding, next time and whatnot. And the same thing happens on the personal side of things, right? If your budget, if you're comparing your numbers in order to try to qualify for some kind of program or something like that, then you actually want your expenses to be, everything is backwards, right? Your expenses, you actually want them to be higher and whatnot. But just realize that normal incentives, of course, would mean that you would generally be better off if you could lower your expenses and be more efficient without it hurting your lifestyle and whatnot. So that would be the general idea. So if we look at this, we'd say the food, then if we look at the surplus or deficit, the food has what we would say a surplus because we spent less, meaning we had more savings than we budgeted to spend. So in essence, if we were judging our performance, we'd say, yeah, we did a better job. And we might want to go into more detail on something like this with the food, especially because you can measure things like, well, how much did I spend on restaurants? How much did I spend on fast food? Generally, if you're spending more money, say on groceries versus restaurants and fast food, you're probably both eating better and saving money. And you could use it in other ways too. You could try to say, well, how much am I spending on what you might classify as good food versus bad food, which that could result in increased on the budget side, but it could also give you detail to break down whether your pros and cons on whether or not that trade-off is worthwhile. And so notice we just have food here. So that's a very broad category, which would be easy for us to compile the data into because we just put everything into food, but it doesn't give us any more nuanced, which may or may not be important for us depending on what we're using it for. Auto, we're saying now this is going to be a deficit because we spent more on the auto than we budgeted. Now, when we think about that, when we have a deficit, then the question is, well, was it justified for us to do that? Meaning, did I spend more on it because of, I was working more or something like that, revenue possibly going up because I worked more or something like that, or was I wasteful in my auto expense somehow, right? And then on the rent, you'll see I'm going to call this NA because you would expect the rent to come out even. It's the same on both the budget versus the actual. How did that happen? Did you guess perfectly? Do you have a crystal ball? No, because I signed a year lease and the rent's like the same until I sign the next lease. That's what we call a fixed cost. I have no control over it. So when I'm looking at it for my judgment purposes, it's not like I'm saying, hey, look, I did it perfect. I'm right on right there. It's like, no, it doesn't. I have no control over that one. That's going to be the fixed cost. My behavior that last month had no control over how much I spent on the rent because I signed the lease a couple months ago or something. So the clothing, so this one again, I'm going to say we have a deficit on this one. Notice we set it up so the negative is a deficit. Once again, the clothing is kind of a broad category. So, you might, if you spend a lot on clothing or whatnot, you might track the clothing. For me, clothing is something that's confusing because if I run out of socks or something like that, then I try to buy like 5 years of socks that hopefully that they all match together so I can like mix and match them and it doesn't matter. And then I don't buy any socks until like they all have holes in them or something. So I have a problem on that where I don't always spend, each month on clothing. And so it's one of those, so it's not an expense, I'd have to use an accrual kind of basis if my clothing becomes significant. But in any case, if you're looking at clothing items, then you might group them into more detailed kind of clothing where you're shopping in terms of different clothing items or and whatnot. But so it's a fairly broad category. So then we got the personal, and now personal, and we're at a surplus here. The personal is kind of like miscellaneous for a company. So everything that doesn't fall into utilities and notice I don't have things like utilities and whatnot here. So, and you would think, we'd have some of those here too as well. So we possibly group those into personal in this example, which would be a lot of grouping. So notice personal would be kind of like miscellaneous for a business. And if you've ever done business accounting, it's kind of disturbing. If something seems wrong if the miscellaneous account is like one of their highest accounts, because that means they just put all this stuff into miscellaneous and there's a lot of money in there. And that doesn't give us any detail of what you actually spent it on, right? You just put it in the, right? And if we could do that on the personal side as well. We could do, it's just personal. You might just have like one account, it's all personal. And that saves a lot of time for the expenses, but it doesn't give you that much detail. Obviously, there's a lot of things that you might put into like miscellaneous or simply a personal account because you're going to have a lot of random things that you might be purchasing. And so, again, the trade-offs are going to be how many accounts do you want to have and how much does this tell me about what I can do actionably next period if I just have this personal category. Is that enough for me to take action on next month, or do I want maybe more detail if I have a lot of stuff in that personal? All right, let's center that, home tab, alignment, and center this. I'm going to do some summing up here. Let's select these three and go to the font group underline. Use the trusty equals sum sum function of these items. I'm going to copy that across, standard table building, and that'll copy the formula across. So we're going to take that, copy it across. So there we have it, and we're left with a total surplus. So we have a surplus on the total. We can also calculate that. I'm going to center that by taking this equals this number minus this number. In other words, when you build your table, you can kind of double check by taking your totals, this minus this. That's my total change, my total difference. Note my total difference when I look at that. And this is, this is similar to, again, how much detailed data analysis you want to do. Because if I look at my total difference, I'm like, I did good. It was good. I got 62, surplus on this. But then what you really want to do is look at the categories so you could say where you did good and where we didn't do as good, right? The food was actually quite good. We did good there. For some reason, the auto was over, and for some reason, the clothing was over, and the personal we actually did good on, right? So this, in other words, this 62 total difference could be fairly small while you could still have fairly large differences over in the actual detailed data. So that's why it can be useful, again, to break it out into detail to see what actually happened, even if your total difference looks small. In other words, if you just look at this total difference, like, I don't even need to look at the data. And maybe you don't, but if you were to look at the data, it's possible that small difference was created by huge swings in the budget versus actual in individual categories that you might want to spend some time on.